Welcome back, traders. Welcome back to the channel. So today in this same video I'm going to be teaching you how to draw support and resistance, how you can draw your support and resistance, and then use it to trade demand and supply. Whenever I've been telling people that a support broken turns into a resistance and resistance broken turns into support, some people do not understand how that works. So today I'm going to be showing you how to draw your support and resistance, and how support and resistance can be used to trade demand and supply. I know demand and supply is a trading strategy on its own. Also, support and resistance is a trading strategy on its own. However, what do you think if these two strategies were combined? What would they produce? Like what would be the ideal result of those strategies? You can use demand and supply and add support to resistance to give it strong confluence or give it a strong backing. If you know that at the place that you really accept that this is my demand zone, and you see that place, that point also coinciding with support, then you know that that is a strong zone. So let's say, for example, price is in an uptrend and then it breaks the previous resistance. As it breaks, it leaves you with a demand zone, and then price comes back to test that demand zone, but at that demand zone is where the previous resistance is. Remember that resistance, since it was broken, automatically turns into support. How do you think that trade is, how credible do you think that trade is going to be, or how strong that price is going to be? So that is what you're going to learn today. Support and resistance combined with demand and supply. How to draw support and resistance and you combine it with demand and supply. Okay, so that being said, you guys have to subscribe to the channel. I told you we're on the road to 500 subscribers. The road to 500 subscribers. So far we're at 480, and we have had only, I think we're supposed to add around 20 people should subscribe, such that we can, people who are watching this video and are not yet subscribed, kindly please subscribe. Only 20 people, such that we can match the 500 mark, and then we push to greater heights. So I'll just give you 5 seconds. Let's all subscribe, guys. Whoever's watching, kindly subscribe. That is the only thing we require from you. Kindly subscribe. You don't lose anything. Just hit the subscribe button, and then I'll proceed with the analysis on the charts. We are going to 500 subscribers, 20 more people. I need 20 more people to subscribe to the channel. So subscribe, guys. 5 seconds and we proceed. Okay, so now let's proceed. I hope you guys have subscribed. We are growing this channel. Be part of this growing community of real traders, authentic traders, raw traders. Okay, so let's go. So now, first things first, we are going to learn how to draw support and resistance. I know that was one of my earlier videos. I think the videos that started this channel about how to do support and resistance. So first things first, I'm going to teach you how to do support and resistance, and then we shall proceed to see how can we combine it with demand and supply to get high probability trades. Okay, so we come to the charts. I always start with the Euro USD. Why? Because most traders trade Euro USD. So this is Euro USD, and this is the weekly time frame. Now, the first things first, you're going to look at the peaks and valleys, or highs and lows. And after, now, I'm not going to be doing it as a senior. I'm going to be doing it as an amateur, or as simple as I can, such that everyone can grasp the concept. So first things first, you'll come to your chart and zoom in. Is it zoom out? Zoom in, like that. Zoom in to the extent that you don't see the actual candlesticks, but you can see peaks and valleys. Like I can see this one. All you can see are peaks and valleys. So to give it extra not confluence, to give it extra visibility, put it in the line chart. Put it in the line chart like that. Now you're good to go. So what you do, get your line tool and then draw on those peaks. Just put on those peaks. As you're putting on the peaks, make sure you put where many touches are touching on the peak, like this one. 1, 2, 3, 4, 5, 6. Make sure most of the touches are touching on those peaks, like that. You see? Simple. Just identify those peaks and then put your support there. So that is what we have. We have 3 lines. Remember, this is the weekly time frame. So you go back to our candlesticks. Now that we know where those lines are passing, good. We shall now draw our support and resistance. So first thing is, and remember this example I'm only going to be using Euro USD. So we shall draw one here like this. Just get your box tool and draw like that, and then remove this line. We just want to make it clean and neat. Get your box tool and draw another one here like that, and then remove your line, and then get another box tool and then draw another one here like that, and then remove your remove your line like that. So now after that, what next? You're going to refine this support. Just try to make it small and neat. It shouldn't be that big. Okay, so that is it. So now after you have identified your key areas on the this one I are supposed to put it down here, not up. I know this is an area that has been there before, but we have a new one. This one was supposed to be down here. I think we can all agree on that here, like that, because you see price tapped here, almost tapped here, almost tapped here, all tapped here twice. So this is the real zone. This one was a previous one, but this one was created later. Sorry about that. Okay, so now what do we have? We have support and resistance on the weekly time frame. So this is our resistance. Now price dropped down. We expect that if price comes here, it is going to use it as support and then come down. This is our resistance. Price came, used it as resistance, then here broke out, retested, and then went up. So now it has broken this area and it's looking like it is retesting. However, I shall come to that later. Okay, so let's proceed. Now what do we do after drawing your support and resistance clear on the weekly time frame? Go to the daily to even refine them more further. So when you come to the daily, this is what you see. Let's start from up here. So this is what you see. Our support, this is our resistance, daily resistance. Now on the support side, this is our support. Also down is resistance, up is support. So just to refine it smaller, like that. Then this one that is being used at support, just adjust it a little bit to the upside to make sure that you accommodate these areas here. So it tapped here, went up, tapped again, went up, came back, tapped here, went down, went up, went down, went up, went down. So ideally, if you're trading support and resistance on the daily time frame, then you would be in for long big swings, because look at here, price broke and then retested. After retesting here, it went up. How many pips? Around 400 pips. Good. Then it dropped down back here. Again, after reaching here, it went up again around 500 pips. Tried to come back, but it failed. Ranged, then went back to this resistance. After hitting the resistance here, it dropped massively, coming back to this zone, and then it bought massively, coming back to this zone, dropped massively, did not reach here exactly, and then it bought. People who are trading support and resistance, now that is what they want. A ranging market on the weekly time frame is a very good market for support and resistance traders. So now, after you have established your support and resistance very well, what next? You're looking to identify your supply and demand zones on support and resistance. In this case, we shall identify our supply and demand zones on support. So now we come here. Let's use this first one. So price broke out of this previous resistance like this, and then came to retest this area, tested the resistance that turned to support, and then went up. So after going up, it broke this structure here, a massive move to the upside, then price started retracing. So now, as it is retracing, where do you think price is going to react from? That is now where demand and supply comes in. Where do you think price is going to react from? You identify places of demand. This is an engulfing candle which engulfs this previous candle, then a good move away, so we can highlight this area as a demand zone like this, then stretch it to the extreme right. I don't know where the wick ends. The wick ends here like that. However, in the actual sense, you should include this support here, but even there it is okay. So now you have identified the zone. Price came here and bought. So now you have marked your demand zone very well. And remember, this demand zone is also at a support level. So that means our bias is now even more strong. Why? Because we have a demand zone which shows that the buyers will come in. And that demand zone is at a support level, which means the buyers still come in at support and push prices up. So we have two confluences on the daily time frame. So what do we do for that case? We drop down to the 4-hour time frame or 1 time frame lower to refine our entries and get at least smaller stop losses. So when we come back to our 1 time frame lower, guys of trading view are sending that thing, we can refine this price action to this candle here, this one here. You see? Let me see. Yes, we can refine it to, I'm trying to get to mark this candle. Yeah, it is here. So we can refine it to that. You see? However, when we refine it to that, I think we are losing some. We are going to miss out on the, no, we are not missing out on the trade. This is the previous support. Yes, we are not missing out on the trade. So like I told you last time, make sure you don't over refine, because if you over refine, sometimes we can miss out on the trade, but it doesn't mean that you're wrong. Okay, so now 4 hour is telling us we're buying from here. Remember, this is a demand zone. Look at the basing, drop base, look at the move away, price just shot up. So you're going to enter from here. Your stop loss should be below this one, that is 59 pips, so just make it 60. But for conservative traders, they put your stop losses below there, but even there it is okay because this is a demand zone and it is at a place of support and resistance, guys. Support and resistance. So price came, did not reach there, went up. Price ranged again, tapped, but I don't think here you were triggered. It went back up again, breaking this structure. So when price came back again, look at the drop, tapped into the zone, and then it started moving. So meaning you would have waited for how long? You'd have waited for 2 weeks before you got that trade fully. And then price tapped in. After tapping in, guys, look at the movement. 200 pips. That is what the 300 pips. And let me just stretch this so that we got the daily time frame and see how it moved. So guys, the target was the previous high, this one, 450. That is 1:7, but it went up to 500 pips, 1:9. So by that time you are already out because you don't know where price is going to retrace from. So you would get 1 is to 9 and then come out. However, the real take profit was here. The real take profit was there. So that is how you can use support and resistance with demand and supply. However, I'll show you one more example still on the same Euro USD with the same, but this one I want on the sell side. I see a lot on the buy side. There is this one here. I want on the sell side. I see one on the sell side here. Why is it? So now price came there, then dropped massively up to here. However, after dropping, I think this was on the weekly. Let me see on the weekly. See on the weekly. The weekly is not that clear. The weekly is not that clear because there is this one, and then there is this one. This one, okay, this one was tested by this. So there is this one up here. So I'll just mark it. The area was going to be so big, so the right thing to do is to mark, refine it to that. Yes. So let's go back to our daily time frame and I show you. So guys, you keep on alternating the time frames because sometimes price will decide to use the demand zone on the 4-hour, the daily, the 6-hour, or even the weekly. For as long as you know where the area is, try to alternate time frames. So the demand zone is there. If you refine this up to here, you're going to miss the trade. I don't think it reached there. It did not. So you had to leave the one on the weekly time frame, which is there. Okay, so there's a sniper entry for you there. So when the price came here, price ranged and then used this weekly time frame on slightly up the resistance, try to break the resistance. This looks like a fake out, but a fake out to come and tap into the weekly supply and then drop. But it is as well dropping at a place of resistance. That is where it dropped from. Then we come to this one, drop, base, drop. So price came to a base drop. Okay, so price came to a base drop, base, this one here. You see, base drop, base, and then it went down. And remember, this is also a support zone, or it is a place of support. So people who trade support and resistance, simple. Enter from there, stop losses above the support zone. And then you target the previous above the resistance and target the previous support, which is supposed to be here. However, price stopped at around 400 pips, 490 pips. 1 is to 3.6, and then it turned around. So if your take profit was here, you would be trailing, but I'm very, very certain that after your trailing, you would be stopped at around this area because you would trade price action to here and then it retraces, stop you out for around 1 is to 2, and then it turns back. So that is all, guys. That is how you use support and resistance with demand and supply. I'll be doing more videos about that. However, for now, that is what we have, and continue subscribing to the channel, guys. We need to grow this channel to up to 500 subscribers all the way to 1k subscribers. So kindly subscribe to the channel and also like the video. Bye.